All right, great. Welcome, everyone. So let's get started. I want to start out just for a few minutes going over the concept, the title item, so title, trade like a bank. And we'll go over that here with 3 or 4 pages that I'll go over with you of trades that we took recently. And then we'll dive into the live markets. Great day to have a webinar like this. The markets have moved a lot. We've got some nice opportunities sitting out there, so we'll make sure to get to live markets before, just a little bit and go over those. So we'll talk high-level strategy, and then we'll go into live markets and apply it. So again, and it's no secret. I mean, I think one of the best things we can do is go right to the, just be honest and go right to the issue, right? Everybody, we all want to make money speculating in markets. We hear about, we're going to go over that question there, Shambi. Everybody wants to make money speculating in markets. We see the Goldman Sachses and the big banks out there and the Warren Buffetts of the world and we think, what kind of person is it that can make all that, all that money? What's so special about these people? Is there some, special type of person that works at Goldman Sachs or Morgan Stanley or any of those? No. And I think, what I want to go over here today is really just start with high level, getting people's mind in the right direction, having thinking the market's the right way. That's the real issue. Once you get that, I would suggest that the rules and logic are not that difficult. So when I started out on the bank side of the business, on the institution side of the business, on a trading floor many years ago, I actually started in the Forex market. So, not, I don't know if a lot of people know that, but I started out in the currencies, for a long time before I even, got involved in anything else. And my job was to facilitate institutional order flow, dealing with banks, money managers, you name it, all in the currencies. Mainly the yen, the pound, the Swiss. Those were the 3 markets I mainly dealt with in the beginning. Back then we had the Deutschmark also, so you didn't have the euro. Anyway, and for me it was pretty simple. I had no experience when I got started at this, so I got to see how this, how money is really made and lost in the markets, how all this stuff really works. And it was pretty simple. What a bank knows and understands that most retail traders don't is that how you make money buying and selling anything in the markets is exactly how you make money buying and selling in the financial markets. It's all about identifying wholesale prices and buying there, and then identifying retail prices and selling there. That's it. Everything else is very, very secondary. In fact, there really is no secondary. That's all. Trends and all this other stuff. And if you think about all the conventional technical analysis information like Fibonacci retracement levels and Fibonacci extension lines and chart patterns and head and shoulders this and moving average that, at the end of the day, every single one of those things that I could possibly mention, the goal is to figure out where are wholesale prices and where are retail prices, right? Where are prices going to turn and where are they going to go? So instead of going down that path with all that information, which actually has you taking the opposite action of what you should, right? How many times have you heard a new trader say, boy, if I just took the opposite side of all my trades, I'd have so much money. You heard people say that before? There's a reason, okay? So many people say that. It's because how retail traders learn to do this is exactly opposite of how it is really done. Okay. So our goal is to recognize the picture on a chart that represents real wholesale prices and real retail prices. Okay. Where are banks buying and where are banks selling? So let's start with what we see on the screen here. And that will be our only focus. And I'm going to encourage you to do something a little bit different today than we usually do. When we're going over this and identifying levels and stuff like that and opportunities, instead of asking, you may want to ask, well, what about the trend and what about this and what about that? Try to just forget about that stuff. Okay? Just don't let it, just forget it. Okay? At least for today. You can go back to it in 45 minutes. How you doing, Boyke? Retail, wholesale, yeah. So, I'm glad you brought that up. So when I say wholesale and retail, yeah, I'm just interchanging those words for the word term supply and demand. Okay? And that's really all they are. But the words that I won't include in that because they're not right is, support and resistance. Okay? I shouldn't say that. I should say the challenge with support and resistance is that everybody has a different definition of it. Okay? Versus when we say, demand is a price level where willing demand exceeds willing supply, you can't have a bunch of opinions. There's not a lot of, right? So anyway, let's jump in here and take a look. So we took some screenshots of some live trading sessions. When you see XLT on top of the screen, that's the extended learning track. Those are our trading rooms. So here's a screenshot of a live session we had recently a couple weeks ago, and we identified a level here. Don't worry about time frame or anything else. Price rallied up. Then we had a decline in price. Price was basing here for a little bit. And then price collapsed out of that level. Why did price fall away from that level? And why could price only stay here for a short period of time? And why is it that there's so much white space around this area? It's because behind the scenes, there's a lot more supply than there is willing demand at that price level. Pretty simple, right? Nothing complicated about that. So once we identify that level, we wrap two lines around that level, creating a supply zone or sell zone. Another word for supply, retail prices. Now, for us to call this a quality supply level or retail prices that we would want to sell at, a few things need to happen to tell us that, there's a lot of unfilled orders there. Right? Number one, I want to see prices move away from this level in somewhat strong fashion. Number two, I want to see prices travel quite a distance away from this level before returning back to the level. To be specific, if you want exact rules, I want to see this initial move away from the level that tells us supply exceeds demand here to be at least twice the supply level itself. Okay. That does a lot for us that we'll talk about in a minute. It gives us our initial profit zone and all this other good stuff. Another thing that will tell us this is there are banks selling here. This is a quality supply level. Is how much time did price spend at the level? You see how price spent so little time here? And you see how price spent so much time here? Remember, ultimately, what are we looking for? What picture are we looking for? The picture that represents a strong supply and demand imbalance. If you knew that there was a price level below current price where willing demand was 1,000 and willing supply was, 2 versus a price level where willing demand was 1,000 and willing supply was 900, which one would you want to buy at? The first one, right? Because the imbalance is greater there. Prices are going to turn quicker. Move's going to be stronger. So if you agree with that, then what does that picture look like on the chart? Again, notice how little time price spent at this level, but then look down here and look how much time price spent here. See all this time? Look at this. Price goes through it like it's not even there. It's because this picture is telling us there is nothing there. Remember, think of it this way. The more time price spends here, the less orders there are to be filled because all the orders are being filled, which means there's nothing to stop this from falling. So more time at the level, which is what conventional support and resistance levels preach, is not a good thing. However, less time at the level is a good thing. We don't want to identify turning points, which is what this is all about. We don't want to look for areas on the chart where there was lots of trading activity. We want to figure out the areas on the chart where there's very little trading activity. I don't care price was able to go. I want to know where price is not able to go. Does that make sense? Okay. So let's, so you see OE scored 9. OE stands for odds enhancers. And I've just quickly gone over 3 of them, right? How did prices leave the level? How much time did price spend at the level? And so on. This one scored out as a 9. Now our scoring system, Non-Line Trading Academy, the highest score you can have is a 10. So this one was pretty good. Had a bunch of odds enhancers at play. The other one you don't see here, because this was a small time frame, is where is this supply level on the larger time frame supply-demand curve? So when we're identifying market turning points, supply and demand levels, retail, wholesale prices, whatever you want to call them, we're always focused on 2 things, location and structure, right? Where are we on the larger time frame supply-demand curve, and where are the orders, location, structure. Okay, so this one scored out as a 9. We had an opportunity to risk 10 points here to potentially make 40. Okay. I just clicked the screen here. A little bit later during that session, prices rallied up to retail prices, supply, and notice how prices just turned on a dime there and collapsed. Make sense? Guardian, that is important. Okay, that is important, but it's not a deal killer, right? And again, it depends on where that is on the curve and a couple other odds enhancers. But I want to point something out to you that whole time deal, because a lot of people don't get that and don't think it's a big deal. But look at the yellow shaded area, specifically the lower portion of it. That's the supply level there. And then I bet it's so small you can barely see it, right? That little supply area in there. There's like 3 candles. And notice how when price gets there, it just turns so quickly for us, right? This is looks like a Dow mini chart, 5-minute chart. And it doesn't matter what time frame of market this is, but we're actually going to start with the euro. It's a nice opportunity coming up with the euro. But now look over here again. Look at all this trading activity here that I'm pointing to a little bit over to the left, and look at how when price goes down to that, it completely ignores it. It's because there is nothing there. Okay, the more candles you see on your screen, and the more time price spends at a level, the less out of balance supply and demand is at the level. Remember, the price chart it's not that it just shows us the wrong information. It actually shows us the opposite information, right? I don't care where price is traded at. I care about where prices could not trade at, and I understand why. Okay, so this worked out fine. Risk intent to make about 40. Next one, this is a commodity market, crude oil. Andre, yeah, good point there. Good point. Well put. So, down here again, now this trade I missed. I actually had the look sitting above, so I wasn't happy about that. Anyway, you're at a supply level here. So notice prices are moving down. Big picture, small picture. And we have a little supply level here. Very little trading. Kind of a strong drop away. Strong and move away from the level. It just kind of keeps going. In other words, and travels pretty far, which means, more than twice the distance of the level itself. Okay, so, but what I point out here is a concept that we didn't talk about on the last example. When price comes back to the level, and this is really what it's all about, okay? So we've got our supply level. You don't need me to run through those out again. This one scored out to an 8, by the way. Banks were selling crude oil here. But when price came back to the level right here for the entry, let me just fix that circle. Who was the buyer here? You need to, especially if you're trading the Forex market, you need to understand who's on the other side of your trade. Who was buying here? Was it someone who knows what they're doing or someone who doesn't? Was it a retail trader or a professional? And if you, and I would even it more simple if you're brand new to this. Make sure that the person you're buying from, or selling to, I should say up here at supply, is making the two mistakes that every consistent losing novice trader makes, which is buying after a rally in price, mistake number one, and into a price level where supply exceeds demand, mistake number two. Instead of being that buyer, we want to be the seller because prices are at retail level. Now, in this picture, and I'm kind of going, kind of quick here, but we clearly have retail traders on the buy side, banks and institutions on the sell side. And when the chart is telling us that those two groups are clearly matched up against each other, that's when we want to put our hard-earned money at risk for the market. Now, what I want to get into really quick now, and then move on with some more charts, is something I think is most important, the most important, little piece of information we're going to talk about today. And I'll try to do it really quick. And the topic today is, why are banks so profitable and individual retail traders, do so poorly? Why is the gap between the two so wide? I mean, the stock markets today, I think, again, hit all-time highs before they collapsed or close to all-time highs. Well, let's say they're at all-time highs. Is everybody around the country doing well? Can everybody retire now because of that? No. So why is it that, again, banks do so well and everybody else does so poorly? It's this. It fascinates me. I'm fascinated when I see people come into Online Trading Academy that want to, learn to do this and take the classes. Many people come to us. There's all types of people that come to us. But sometimes people come to us that have been in business. They've had a business. They've owned a business. They ran a business. And I would say, how about with our group here today? Have any of you ran a business, been kind of maybe owned a business, everything from a gas station to a convenience store to a big company? Anybody with us here today that's done anything like that? And you don't have to own the business. Maybe you just ran one. Did you run a store? Even if you ran a convenience store or anything. Okay? So I'm fascinated when people like that come to us and they say, this is what I did in my prior life. I'm out of that business now. Now I want to learn how to do this. And this is totally foreign to me. I don't know anything about it. And they go on and on and on. My reply to that person is, you know everything about this. You just told me you built your business up and you just sold it for all this money. You're actually already very good at this. So my job's going to be easy. Okay. If you've ever watched that, think of some big companies out there like Costco. Everybody knows Costco and Walmart and Tesco and Goldman Sachs and JP Morgan, all the big ones out there. Right? Apple Computers, any of those companies. They're all good at two things. What are the two main things that they're good at? There's two things specifically that they have to be good at to be successful. And all the companies I just mentioned are very good at these two things. What are they? The first one, right, buy and sell, but where? Right, buy wholesale, sell retail. They have to master that. Absolutely, that's one of them. And I would take Costco and Goldman Sachs and Apple. They've got that nailed. They're good at that. What's the only other thing they have to be really good at? Once they've got that down, what's the other thing they've got to be good at? There's one more thing. Marketing. Exactly. Marketing and advertising. Yes. And Goldman Sachs is very good at marketing. Costco, Walmart, low prices every day. They're very good at marketing. They've got to get people to be convinced to pay the retail prices that they're selling at. Okay. In fact, Walmart and Costco especially, right? Their goal is to get us to think that the retail prices they're offering are actually wholesale prices. Okay. Now, is that true? No. They bought at wholesale prices. They're selling to us at retail prices. But they've got people pretty convinced that you walk in a Costco, that you're walking in a warehouse where you're buying in bulk, and so you have to be paying wholesale prices, right? Anybody see the hour-long special on Costco? Anybody see that on CNBC? If you didn't, I strongly encourage you to go watch it. I'm sure you can. I'm sure it was recorded. You can find it somewhere. Anybody see that hour-long special on Costco on CNBC? Fascinating. And that hour special should be in our trading classes. Okay, because that's exactly what it's all about. So they've mastered the art of buying at wholesale, selling at retail. But what Costco spends so much time doing, what they're so good at, is knowing everything about you and I. What gets, how our brains work. And what gets us to think one way versus another. What gets us to walk 10 steps forward and then turn left. And then focus on what's to our right. They've got that all figured out. Okay? Everything from creating the warehouse effect to make sure that you think that in buy in bulk, that you're absolutely sure that prices are lower than everywhere else. You'll see in the hour-long special, prices are actually higher than other places, right? And they get you to buy a lot of it. Anybody here ever walked in Costco and left without spending $100? I think it's impossible. There's a reason why the big screen TVs are right there when you walk in. If you want big screen TVs, they sell tons. And they sell big screen TVs to people who have no interest in coming to Costco to buy big screen TVs, but people walk out with them every day. Okay. That's what's going on here. Now, when it comes to the trading market, you need to be the Costco. If you're not thinking and acting like Goldman Sachs and Costco and Walmart, they're all the same company, right? Chances of you being successful is not good. If you are solely focused on thinking like a bank, thinking like Costco and acting like Costco, you have a great chance of being successful. In fact, has it ever, does it ever seem like too easy for Goldman Sachs and these big companies? Doesn't it seem too easy? The point is, that's their only focus, getting the stocks and bonds and all that at wholesale prices and selling at retail prices. Twitter's going public today, right? It might even be trading already. I don't even know. I think today's the Twitter day. I don't know where it's trading at, but I'm sure someone in our group probably does. Or is it in 30s or 40s maybe? I don't know. But do you think the companies that are selling it paid 30 or 40 for it? Right? They probably got it for pennies. Buy it wholesale, sell it retail. Okay. Sometimes I'm a little uncomfortable going over my material because I feel like I'm always saying the same thing and I'm always showing the same charts. I'm always doing, the same thing over and over and over. But if you think about it, what does Walmart do every day? The same thing. They buy the plastic and toothpaste for a nickel and they sell it for 50 cents and they just do it over and over. Goldman Sachs, it's the same thing every day. What they don't do, what they never ever do is buy it retail and sell it wholesale. If they did, they would be out of business. Now, there's plenty of people that have started companies that buy it retail and sell it wholesale, but they're not in business long. Okay? All right. So, anyway, so as difficult as it is to actually, while I think everything we're saying and talking about here today is very simple, the act of doing it is difficult. That's why so many people lose money. Just like it's so hard, and I want to make sure you understand this, just like it's so hard to walk into, let me go back to this example. It's so hard to walk out of Costco, but, you may go to Costco to buy one or two things. Good luck, okay? Try to walk out of there just buying what you went there to buy. I bet 90% of people, if not more, are not able to do that. Okay? But you're not going to go broke doing that. You don't have a trading account that's going to go empty if you buy a few extra things at Costco. You're going to get a little more toilet paper and probably some more candy or something, right? It's not the end of the world. But in the charts, in the trading chart, which we're looking at right here, you take that action with your hard-earned money at risk in the market, now you're talking some serious trouble if you don't do it right. Yeah, Dr. Rob, it's a great comment there. That's why China's so successful. And for a lot of people that don't know, and I'm not an expert on China, but China runs their country like a business, period. They really don't care about anything else. It's a very different, I've been there, and again, I'm certainly not an expert on China, but it's a very, very different, different everything from the United States and all these other places. it's not, it's a completely different category. They absolutely run their country like a business. You don't have, well, anyway, I don't want to, pick on the Chinese government, but, and I'm not, there's not, if that's what they want to do, great. If that's what the people of China want, that's great. And I'm not saying it's good or bad. It's just, that's how they run their country, and that's why so much money flows into China. Yeah. You need a trade plan, but equally important, you need to be able to follow that trade plan. And if you can't, there you go, Boyke. And it's the whole thing. I mean, so Boyke's pointing out some important things here: cheap labor and fixed currency. Yeah, and we could come up with a whole list of that for China. But what is that list really? It's their trading plan, and they follow their trading plan. Right. Now, so again, but you take that action here, you buy retail in the trading markets, you're going to lose your money very quickly. All right, so let's move on here. Real quickly, I want to point out, and then after this chart, we'll go to the live market. I want to point out a trade that I took not long ago, it was a week or so ago. If you look at the screen here, this is a trade I took. I took it in the Euro futures, not the spot. Had an odds enhancer score of a 9, but you're looking at a chart of the U.S. dollar. Now, the reason why you see two charts here is because the level is from, quite a ways back, earlier in the year. So recently, the dollar declined. Remember this big dollar drop? That was the euro massive rally. Declined into this demand level that was formed in February earlier this year. Now, if you notice that a week or so ago, or whatever it was, when the euro was just flying, and then it reached a level, stopped rallying, and then fell. Right, it felt pretty good. But if you notice, I'm sure many of you were probably looking to short the euro somewhere up there. But I'll be the first one to admit I really couldn't find a quality level to short at up there. I knew I wanted to, but I couldn't find a quality level to short at. So I was going over this with you because I think it might help you. So what I did there, and what I'll do quite a bit, is I'll take a trade in the euro just by looking at a chart of the U.S. dollar. All right. So even though I took the trade here in the euro, that was a short. It was completely 100% based off of the dollar. Right. So this dollar rally, euro falls, and made 20 ticks or so in the euro. Not a big deal, but the whole point is, if you can or cannot find a quality level in the supplier demand level in the euro, feel free to look at the dollar, and the dollar usually help you out there. Let's go over to the live markets now. And why don't we specifically start with the euro? Give me just a moment, and I need to. I think I need to stop sharing and then share a different application here. Hang on a second. There we go. Trade charts will come up in just a second. All right, there we are. Yep, great. Boyke's making a great point there. I couldn't agree more. If you don't believe in charts, don't try to trade. And if you do, remember, he told you so. Let's see. True, yeah, you really have to, dive into the odds enhancers and make sure you got them right, of course. And the higher the score, the better the trade worked out. So if you take a look today, let's look at a turn that just happened, and then there's another one probably right around the corner that we'll look at. Again, for those of you who've been with us for a while, one of the most important charts for me is always the U.S. dollar. And the dollar came up close to these two supply levels sitting on top of each other. Retail prices up here. Didn't quite get to 850, but got close. So we'll see if prices can rally back up there again. It looks like a great place for the dollar to turn and fall, which means we'd expect the euro to probably be down deeper into this daily demand a little bit and then turn. First of all, this demand level, which scores out very high because it's got the gap, on the daily. Notice price just touched the level and turned. Okay, so we'd be okay taking another entry down in that area if the dollar falls into that level. But now sitting just above, we've got this area right here. So I'm just going to put a box around it, and then we're going to go investigate it on a smaller time frame. We'll do that here. And when we see the origin of the drop is really about 135 even. So I'm going to bring this box up a little. To right there. So now we've got a supply level on a larger time frame, which is nice. Supply and demand. So it's not often that the euro has such a nice area above and a nice area below. I can get rid of this 240-minute chart now, the 4-hour. And let's look at the dollar. So if the euro gets up to about 135, certainly keep an eye on the dollar coming into some demand. It'll probably be right around here. Just make sure you kind of line these up. So for the next couple of days, I would certainly watch the dollar and the euro relationship there, and we'll probably have some opportunity. Price is likely to stay in between these two levels for just a bit. We should be able to get some trades off that. I did FT, yes. Took one trade in the S&P. That was it. Right off the supply-demand grid. Okay. Let me just read back for a second. I can go to another market if you like. Just let me know what market you want to look at, and we can go there. I've got a whole list here to run through, but I'm here for you. So I'm just reading back in the chat here, sir. Yeah, the curve. So when I see a couple questions on the curve. It's important to know where you're at, where price is at on the larger time frame supply-demand curve. What we mean by that is to quantify that. And again, it's just supply-demand 101, like anything else. But to quantify that, which is the important thing, we want to look to the larger time frames, specifically the daily and weekly. Where is the fresh supply level above current price? Where's the fresh demand level below current price? And now, for example, in the euro, we have that. We now know what we have the curve kind of mapped out there. So if you're doing some short-term trading, we want to be looking for shorts up near larger time frame supply, and looking for longs down near larger time frame demand. If you're looking at the smaller time frames. Okay. Let's see. Go back here. Drew, yeah. So, I'd have to really, what we could do is look back at the supply-demand grid, and maybe next session we'll go over that together. But I think you'll see the levels that score out pretty high work out much of the time. Exact numbers, I don't know, maybe 8 out of 10 times. But we can go back and look. It's pretty high, though. Now, does that mean that everybody takes those trades? I mean, how many people in the mastermind community shorted we had the S&P went right into our level at the high today. How many people actually sold it there? Again, it comes down to having that trading plan, but then being able to execute that trading plan. Yeah, sure. We can look at the pound. I see someone want to look at the pound. Okay. So here's the pound. We're going to have to go back Let's see, how far are we back? Looks like quite a ways. Well, maybe not too far. All right, so here is we'll watch for this level right here. This is kind of a key level that looks like it's coming up. Okay. That one comes up at 161. Right around 161.38 to, you probably have to stop around 50. But this is a 45-minute chart, close to a 60-minute chart. Okay, watch for that one. I'll do this again. That's the nearest supply level above current price that we'd be interested sellers at. Really not that far if you look at how fast price is moving. And again, just to kind of remind you, see how price is just kind of going right through this big area here? It's because this big area to a lot of people means something. To me, in the logic, it doesn't mean anything. The fact that price is able to spend so much time here tells me there can't be a big supply-demand imbalance. Okay, let's go on here. Okay, Euro Yen. Yeah, we can take a look at Euro Yen. Jake, only in the right area. Other than that, rally-based drop and dropping rally is what we're looking for. When you're far out on the curve and you know how to quantify the curve, you can take the rally-based rally and drop-based rally. Here's one. Euro Yen. Looks like someone bought it here. Looking for 3 to 1. I'm not sure where you bought it at. Probably around this demand zone at the bottom is my guess. Yeah, okay. So let me blow this up. Let me just put this on a 5-minute chart. Okay, so you saw this drop base, nice rally, and then just bought the pullback. Is that what you did, Igor? Down into here. If you look, the origin of that rally is really right there. Oh, so you bought here into, I got you, into a level to the left. Let's see what's over there. Okay. Got it. Okay. So, let me go here. So that's on a 2-minute chart, but it looks like you got it right. You got a nice demand level. You're obviously making money in the trade. And now there's room to at least 132.40 before you get to some supply up here. Okay. Oops, fix this and go back. Let's go back to the euro just for a moment. Hang on just a second. And hopefully this is helpful. Again, I didn't mean to be yelling at you before with the whole, retail, wholesale, and Costco and all that, but that's really the biggest reason why people lose money. They think how you make money buying and selling anything in life is somehow different from how you make money buying and selling here, and there is no difference. It's all about identify wholesale prices and buy there, identify retail prices and sell there. That's it. Okay. So, Boyke, different levels on different time frames make a difference. I mean, we always, when we find a level, I'll always go down one smaller time frame, and make sure that level's still good, make sure it's still fresh, and all that other stuff. And then, of course, you can go to larger time frame to see where it is on the curve. Oh, why is this chart not changing? There we go. 10, Drew, would be the top score. And again, there's a list of odds enhancers. It's a pretty simple scoring system, and it's an exercise. It's meant to train your eye to identify the key areas. So we're back on the euro. Not a whole lot has happened since we left the euro a few minutes ago. And I see we're kind of out of time here, but watch the euro, and hopefully the information today was helpful. Again, it just comes down to thinking like a bank. If you want those types of results, you have to think the same way, right? So shoot me an email if you have any questions or comments. Seiden@tradingacademy.com. And there's my email address, and Seiden@tradingacademy.com. And have a great day. We'll see you next time, folks. Thanks.